Hey, this is Justin with DayTradeTheMarkets.com, and in this quick video, I wanted to talk about a question we get quite often, which is, should you, especially as a beginning trader, should you trade multiple markets or should you be more of a specialist in one market? So I want to talk about some of the pros and cons to both approaches, give an example, kind of show some an illustration, and then talk about what I call a hybrid or franchise approach that I think can help or at least give you something to think about. So with that said, let's jump to it. Let's first talk about just some of, and there are more, but some of the pros and cons to trading one market. One of the benefits of it is you do become a specialist. You really get to know the feel or the personality of a certain market. And while all markets, abide by the same principles, each market does tend to have its own personality and its own feel. So, if you're trading in one market, you do get that feel that's kind of inherent, or I would say intuitive. You get that feel. Also, if you're just focused on one market, you certainly can avoid distraction. You're not going to miss out too often on opportunities if you're just focused on one market. Now, the cons of trading just one market is often it can lead to boredom, or what can happen a little bit more than that is if there's a day when things just aren't happening, there's just no opportunity there, or at least no opportunity in terms of the way that you look at the market, what that can lead to is the idea, or it can lead to forcing of trades that really shouldn't be taken, just because we've all been taught that we're supposed to spend our time working, we should be doing something. So when the best thing to do might be to sit on your hands and do nothing, we force a trade that isn't really there because that's all we're looking at. So that's one of the cons. So there definitely are pros and cons to both. Now let's talk about the pros and cons of trading multiple markets, more than one market. Well, the pro, again, in a weird way, you can actually increase your patience and your discipline, as typically there is some kind of opportunity, depending on how you look at the market, in some market. Not always, but typically if you're looking at an index market and there's nothing going on there might be something going on in the metals or energies or whatever the case may be. And because of that diversification, you can sometimes smooth your P&L. You're not, if there's a tough market condition that lasts for a week or two in one segment of the market, you don't get hurt as badly because you're able to smooth that out with other markets. So there are some positives to that. Now, the cons to that is that it certainly on busy days can be a bit overwhelming. It can lead to being distracted, to missing out on an opportunity because you're not able to completely focus on all of these different things at one time. And it also can be, again, we talked about the personalities of different markets. And again, while all markets do have to trade by the same principles, they do have different personalities. I mean, the energy markets are you can be more home run oriented, whereas in the E-mini S&P, for example, it's certainly a tighter market, just generally speaking. It's like a difference between a cruise ship and a speedboat. So again, different personalities to different markets, and you need to be able to adjust to that if you're going to trade multiple markets. And to give a bit of an example, and this is from today, I'm doing this video, it's a little before the market closed, at least in the index markets, on March 6th, 2014, and don't worry if you're watching this a year from now, it's not relevant what the date is. I just wanted to post that. What I've done with this chart is this is a 2-minute chart, and I've taken off everything except for just level 2 and level 3 bars, which were our strong aggression bars and our extreme aggression bars. Just to give I've taken off our support resistance zone and our filter and the bigger picture bias and all the other pieces of evidence that we look at, just to illustrate this. And granted, this market hasn't fully closed yet. I'm doing this video because it's been a pretty slow day. So this thing could take off in the last hour of trading, certainly. But on this day, to this point at least, this market's only had about a 7-point range in the ES, which is a $350, give or take, a tick or two here, range on one contract. So, and beyond that, there's no extreme aggression bars to work with. You can see, again, I've taken off everything except for level 2 and level 3 bars, and you can see there are no level 3 or extreme bars. And that's really one of the first things we like to key on as to whether a market has a lot behind it. You can see that's not the case. We had a level 2, a strong buying bar that had a little bit of follow through, a level 2 strong selling bar on the low that had a little bit of follow through, but then rejected after a couple points lower. So just not a lot of opportunity there. And if you're just trading the ES, it could potentially force you into, or could cause you to force some trades that might not really be there. Okay. Now, compare that to gold today. And again, it doesn't matter if you're watching this 2 years from now, the same principles apply. today, and this is, kind of can be par for the course for gold, this has been about a 1700 give or take dollar range on one contract. Okay. There's also been a lot of extreme bars to work with. You can see we had a selling bar that didn't have much follow through, and then buyers really came in and took over with some extreme level 2 and then some extreme level 3 buying bars. Okay, so it shows us that bulls really took over. And again, there's other evidence that we would be looking at, including support resistance zones and our filter and our bigger picture. We broke through a bigger picture level on that move higher and that sort of thing. But again, I just wanted to kind of simplify and just kind of show that while there wasn't much going on in the ES today, there was a lot going on in gold. So, if you tend to force trades in looking at just one market, then, looking at multiple markets might be a solution to help you. Now, that leads to the question of what you should do personally. And I actually think there is kind of a procedure that you should go through, and I want to talk about that now. I think before I get to that, though, first and foremost, you need to really know yourself. If you are comfortable and prefer just being a specialist in one market, there is absolutely nothing wrong with that. In fact, I used to kind of be of that school of thought. I've changed it a little bit to what I'm going to share in a minute. But if you prefer that just being focused on one market, that is fine. The key is you have to be willing and you have to be able to perhaps go through a day or even 2 days where you don't potentially take a trade. You have to at least be willing. That doesn't often happen, but you have to at least be willing to sit on your hands and do nothing if there's nothing there. And just understand that's the trade-off that you're making for being a specialist in one market, is that some days you need to be a little bit more patient and perhaps not take much action. Or on the other hand, if you know yourself to be a little bit more action-oriented, you need to be doing something to make sure that you're focused and you actually do better when you aren't sitting on your hands, then it probably makes sense to look at multiple markets. And also you need to be able to stay calm, because when the market does get active or there's a major news event, then all these markets can be going crazy at the same time. And you have to be able to stay calm, or at least be able to, put your focus onto one of the markets at a time. So just a couple things that you should at least think about for yourself. Now, what I also would recommend is taking more of a hybrid, or what I sometimes call a franchise approach, where what I mean by a franchise approach is, imagine, trading is a business like anything else, and imagine if you were opening a business that happened to be a restaurant, okay? You're probably not your business plan's probably not going to call for you to start 10 restaurants at once. If you did, you're very unlikely to have much success. But what you would likely do is you would probably open one restaurant, make sure that it's working, make sure you have everything in place, all of your methodology in place, make it successful, and then expand and open other locations. Okay, so that makes sense if you're opening a restaurant. I think that makes sense to all of us. Whereas in trading, I think you can take the same approach, kind of take a hybrid approach, and again, it's important that you master yourself, master your method or way of looking at the market, and then master one market first. Okay, get very comfortable, get very profitable on one market, and then expand one market at a time. And I think it's also important to make sure that second market that you're trading, number one, you start out slowly, trading as small as you can, just to get to know that market's personality a bit more, and also make sure that second market isn't too highly correlated. If you're trading the E-mini S&P, you don't want your second market to be the mini Dow. They're essentially 100% correlated. And I would even say you wouldn't want it to be the Russell necessarily. You'd probably want it to be, crude oil or gold or something, or the euro or whatever the case may be. That's a little bit, everything these days is somewhat correlated, but that's not just completely one-to-one correlation, okay? So I think if you're going to trade multiple markets, that would be the way to do it, is get comfortable with yourself, and with, more than that, how you look at the market, how you make trading decisions, and then build from there. And then also, if things are crazy and it's one of those days where a lot's happening and you happen to be looking at 4 markets, you need to at least be willing to perhaps narrow your focus back down to 1 or 2 markets. So maybe you have a primary or 2 primary markets that you look at, and then if things just aren't happening in those markets, you could certainly take the approach where you're going to open yourself up to a 3rd and maybe a 4th market, or some people could do 10 markets. It's really personality, dictated by your personality. But these are at least some things that I think are valuable to think about, and in terms of putting your plan together. And I think that at least if you can consider these ideas, consider these options, and consider how this works for yourself, I truly think that it'll be helpful for you. So hopefully that was helpful. If you have any questions at all, just give us a call or email us at info@daytradethemarkets.com, and we'll get back to you as soon as possible. All right, take care. Thanks.